The bias at this stage seems to be for continued bearishness on the market. Where do you stand at this stage of the game?
Well, I think the charts, as you said, the inability to hold the bounce above 4,000, this new close on the NSE 20, which I think is a fresh 2011 low, and the low volumes we saw yesterday and the day before seem to me to be pointing us further lower. I think we're looking at 3,820 on the NSE 20. On fundamentals, I think we should be higher, but inflation, the price of fuel, the disconnection in the political space, the ICC has alarmed people with the nuclear option of a walkout from the ICC beginning to be priced in ever so slightly into the market, but it's kept us on the back foot.
Of course, you've mentioned a few factors there. As I was saying earlier, we've also got the impact of higher inflation and a volatile foreign exchange rate on firms' earnings seeming to be becoming an increasing concern. What's your outlook on that inflation front in particular?
Well, I think a great deal is going to depend on the rains. The rains came at the back end of last week. This is the beginning of the long rains. Our meteorologist has been putting the frighteners on everybody by saying we're going to be below the moving average by between 20 to 30%. If we're not, if we come on par, then I can see a much more optimistic outlook, lower food prices, lower inflation. But if his prognosis is correct, then I think I'm going to see further pressure on the inflation rate, especially because I'm pretty bullish on crude oil. I think North Africa and the Maghreb is yet to play out in full. And I see oil prices continue to tick higher towards $120. And we import all our fuel.
Well, of course, that's the outlook moving forward. In the meantime, we've got numbers continuing to filter through, especially from the financial space. And that is a sector where, you know, of course, we've got inflation and the various macroeconomic figures coming to bear. CFC Stanbic Holdings out with the earnings report yesterday and posting a nearly four-fold jump in profits, pre-tax profits rising better than expected. Run us through the rationale behind the pullback then that we've seen in that share price.
Well, I'm quite taken aback. I think they've got a lot to go. There's a lot of upside in that share. I think it's trading now at a price earnings ratio of about 13.5. They got a lot of real estate, they got the securities business, they're spinning off the insurance business. And just in terms of human capital, I actually occupy the same office. And really they've put, their bench is now extremely deep. I've been really impressed with the types of people they've put in Nairobi. And I think, this is a very interesting level to be getting into CFC Stanbic. And plus the Standard Bank franchise, they're basically plugging and playing right in the space which dovetails with the business here in Kenya. I'm taken aback by that pullback. I think it's going to be well supported above 70, and I think it's something to buy on pullbacks.
There were two areas of concerns, a concern that actually stood out though, and one of them was that despite the fact that we saw a 30% rise in loans and advances to customers, there was a slight fall in the bank's total interest income to just over 6 billion shillings. What have you made of that move? How are you correlating those two figures?
Yes, no, that's interesting. I'm not sure. I haven't been able to delve into that. I haven't worked that out, but clearly that is a disconsolate situation. I'll have to come back to you on that, I'm afraid, Alishia.
Well, absolutely. We'll touch base with that again next week. In the meantime, we've obviously got the bank's earnings driven by the banking unit, but also being highlighted is that its struggling insurance business has swung back into profits. And it's interesting to see this kind of recovery in the insurance segment because we saw it illustrated in Pan-African Insurance's numbers very recently as well. What are you making of the Kenyan insurance space right now?
Well, what I would say is, 2009 was an annus horribilis for most of these insurance companies. The stock market was very much in the doldrums. So in terms of investment income and impairment, there was quite a lot that these insurance companies had to take on. And what you're seeing now is a turnaround in that as the market bounced. The investment portfolios have increased, and Pan-Afric and CFC Stanbic's insurance businesses ran big equity positions. So I think that's more a reflection of that turnaround in the stock market. In terms of the insurance business itself, I mean, it continues to be, at the actuarial side, continues to be a loss leader, and most of these companies are making money via their investment income. But I think over the next few months over the next year and a half, you're going to see a flight to quality. People are going to look to insure themselves with those institutions which are big enough to be able to pay any claim that comes their way. So I'm expecting some kind of a movement of business into these sort of strong insurance companies, which will be good for both Stanbic, Liberty Life, and the likes of Jubilee.
Let's take a look at Kenya Airways. Aly Khan announcing that it plans to raise up to $250 million this year, most likely through a rights issue to fund this acquisition of a new fleet. What have you made of that announcement?
Well, it's been, I think it was pretty much telegraphed. The price had been in a tailspin from the beginning of the year. We're down about 31% on Kenya Airways on a one-year basis. But you know, we're very close to a 52-week low, which is bearish on the charts. But having said all of that, you've got a trailing PE of 8. They accelerated their first half earnings by 66%. A forward implied PE of about 5.5. I don't know how much lower the share can go, and I think it's well overdue a bounce. But I listened to your commentary beforehand, and if Kenya Airways are not going to give us more color on their fundraising exercise as to what they're going to do until April, I think, you know, you've got a long period before the bottom gets hollowed out and we got some kind of recovery going. Of
course, KQ has not officially announced that funding strategy. Are there more viable options in your mind other than a rights issue? Because standing out here is that they do have a highly leveraged balance sheet.
They do, and I think they announced that they were going to go through this exercise. Standard Bank, CFC Stanbic is going to lead the fundraising exercise, but beyond that, they haven't given us any more information. I think, as you say, the balance sheet's way too leveraged. They've got to take in more equity capital, and they might spice it up with some kind of corporate bond as well.